How are we getting on, people? Luke here from LAGFX. We're back today with a new top trades of the week video. In today's video, we are going to be going over a short position that we placed on the Euro NZD pair. This was a position that was placed on the 5th of September and ran through to the 8th of September. As you can see on screen, it generated us with 11 risk to reward ratio, which is brilliant. We had a stop loss no larger than 15 pips and a take profit of 171 pips. Now, these videos are obviously designed to give you a good understanding on the analysis that was performed prior to placing the position. This is a great way for you guys to learn how to trade, and it's also a great way to showcase the skill over at LAGFX. We offer full transparency with every single position that we place in the markets, giving you analysis from start to finish, as well as messages that have been sent to clients and profit sheets as well. Now, if you guys do go on to enjoy this video, don't forget to leave that a thumbs up. And if you learn a thing or two, please leave some feedback in the comments below. Now, without further ado, let's jump straight into today's top trades of the week video. Okay, so first and foremost, the most important thing to highlight and the most important thing to do is to head over to the higher time frames and look at the overall direction of the market. Now, you can see here that this market was clearly a bullish one and was providing us with clear bullish structure. Now, you'll notice that I highlighted out a higher time frame supply zone, and I was expecting to see price reverse from this area of supply, give us a full S&D flip so we could obviously look to take part in short positions. You'll notice how price penetrated this zone, delivered us with a clear break of structure to the downside that told us that enough supply had been introduced into this market to encourage that new trend trading us lower. So if we then just head down to the 4-hour time frames, you'll see the position we placed, as well as a position we placed earlier on the previous week. Now, the reason for this trade and the analysis behind it, well, as I said to you earlier, we were delivered with a break of structure to the downside. This is a valid break of structure because this low here created this high. This was the highest high within this bullish structure, and therefore a break in this protected low would be considered a valid break of structure. Now, what followed was a corrective wave that traded us up and into this fractal supply zone, and it delivered us with clear bearish structure. That's brilliant. There was a position placed there and we walked away with 10 RR. That's amazing. Now, the position we actually got involved from was on the basis of price coming back up to set another or its second lower high within this new bearish trend. So all we had to do was look at the previous impulsive wave, being this one here. We then went down on time frames. And as you can see, I highlighted out a clear last buy to sell region. This green candle here represents an order block that the institutions have left over in the markets, and we wanted to see price trade up and into this to clear any remaining orders before price could then go on to trade lower, setting a new lower low in this market. Now, as you can see, price went on to create just that. Now, our entry for this position was quite simple and quite straightforward, as this market was clearly trading us in a bearish way, and we had confirmation of bearishness via a break of structure to the downside, a penetration of a higher time frame supply zone, and the introduction of bearish structure. We were confident that once price traded into a valid supply zone, we could simply look to go short on the basis of a fractal break of structure and a penetration of a fractal supply zone in and around the higher time frame supply zone that we come to get involved from. Now, you'll notice as we go down to the 5 and 1 minute time frames, I highlighted out another box, and this box here was representing another area of supply that price could trade up and into before trading was short. Now, unfortunately, I can't go down to the 1 minute time frames to actually show this order block, but there is an order block there. You'll notice that we had a break in a 1 minute low that was set here after the penetration. That was enough confluence for me just because we already had the penetration of a higher time frame supply zone, plus all other pieces of confluence that we had been delivered with in previous data. So now all I was simply looking for was for price to trade up and into this supply zone. Price traded in perfectly. We then looked and highlighted out the last protected low within the bullish correction that was trading up and into this supply zone. As soon as price broke structure to the downside from this, that suggested that this corrective wave trading us up and into this fractal supply zone had finished, and a new bearish leg trading us lower was ready to take place. You can see here we were delivered with a break of structure to the downside. Price traded down. We set a pending order. Price came up to clear that and tap us in, and the rest is history. Now, the reason why I was confident that price would come to wick into this area is because, as you can see here, we are left with another order block. So I knew it was only a matter of time before price would trade us in to clear these order blocks before trading us lower in this market. Now, on top of that, we've had the penetration of two supply zones, a higher time frame supply zone as well as a fractal supply zone, both of which were respected, and we've been delivered with multiple pieces of confluence via breaks of structure to the downside. We had a penetration of the extreme higher time frame supply zone plus bearish structure that had been driving the market lower anyways. So it was just a matter of time before price put in this next impulsive wave trading us lower in the market. The trade itself lasted about 3 days, and as I said to you earlier, generated us with a lovely return of 11 RR. So if you're risking 1%, you're looking at 11% returns. If you're risking 2% of your equity, you're looking at 22% returns from this position. Now, throughout the video, I will have put up befores, durings and afters of this trade with the analysis provided to the clients, as well as the actual trade itself, the signal that's sent out. And this is just to provide that honesty, that sense of transparency, because as we know, it's very easy to share misleading information as well as false profits and trades that have been placed in the market. So the reason why I provide those images is just to give you that sense of clarity and that sense of transparency when we provide these top trades of the week videos. Now, if I'm being completely honest with you, this top trades of the week video is probably shorter than the rest, and it's just because there isn't really any in-depth analysis to really go through. We were simply looking at the overall direction of the market on the higher time frame structure. We highlighted out a supply zone, price traded into that. We were delivered with the break of structure to the downside that confirmed bearishness moving forward. We then simply looked at the impulsive waves that were being produced for areas of supply for price to trade back up into before going on to create that next impulsive wave that traded us lower. So we simply got involved at the start of the following impulsive wave that took place. Now, our placement of our take profit and stop loss was very strategic, and we do this every single time we place a position. When we look to place our take profits in running trades, we always set the take profits just above the previous swing low in a bearish trade and just below the previous swing high in a bullish trade. This is just to help guarantee that our take profit can be achieved, because as we know, by price penetrating this supply zone to go on to create a new lower low, that should, in theory, break this previous low here. As we know, in bearish structure, we have the production of lower lows and lower highs, and therefore this low should have been broken to create that new lower low, and that's exactly what happened. Now, our stop loss was placed just above the supply zone that we were getting involved from. Now, because we went down to the fractal nature of this structure, we went down on time frames to the 1 and 5 minutes, we were able to really refine our entry point to allow us to have a great risk-to-reward ratio. Now, you can see here that there was another supply zone that we marked out. Price came to trade into that. We waited for rejection to the downside, and we got involved in this position as well. Another short position, trading the market lower, again taking advantage of the next impulsive wave that followed. Now, if you have a good understanding on smart money concepts as well as price action, you are able to integrate both things to create a strategy that works and can generate you with profits just like this. Now, I don't want to blabber on too much with this video, so I'm going to round this up here, but I just wanted to showcase a brilliant trade that we placed earlier on this month, and just to highlight some of the things that you should be looking out for when looking to analyze and place positions yourself. If you guys have any questions regarding this analysis, this trade, please leave them in the comments below. And if you have enjoyed this video, don't forget to leave it a thumbs up. I just want to thank you all for watching, and we will catch you all in the next one.